Hello, it is Thursday. It is the 27th day of December 2012. Welcome to today's silver chart analysis. Before we get into the silver chart, this is an article which can be found on CNBC, probably a bunch of other different sites as well. And it states, Geithner warns, U.S. hits debt ceiling Monday. It's only 3 paragraphs, tiny paragraphs, 3 sentences almost. Treasury Secretary Geithner on Wednesday notified Congress that the U.S. is going to hit the debt ceiling on New Year's Eve. I'm running to inform you the statutory debt limit will be reached on December 31st. He wrote in a letter to Congress, and to notify you that the Treasury Department will shortly begin taking certain extraordinary measures authorized by law to temporarily postpone the date that the United States would otherwise default on its legal obligations. Such measures, he said, can create some $200 billion in headroom under the debt limit, which would buy a couple months' time under normal circumstances. However, because of the impending fiscal cliff, the effect of such measures can't be certain, he wrote. So, just quickly going over it, we can see that it would take extraordinary measures, although there has been several times before that the debt ceiling has reached its limit, and 100% of the time it has been lifted higher. And then you have this temporarily postponed. And quite frankly, every single time that they create fiat currency, the temporarily postponements of such, well, it's pretty dangerous. So the otherwise situation is a default on legal obligations. I don't know how much longer it's going to take before this actually comes into place as far as United States defaulting or anything of that idea, because obviously on a mathematical level they can keep raising the debt ceiling an infinite amount of times. However, it comes down to the votes by Congress, but more importantly, the mass people who have things to say about this, if of course they ever will. All right, so now let's take a look at the silver chart on the daily time frame. Today, up about a little over 1%, as since this down move, it has pretty much been going in a little bit of a sideways consolidation period. Therefore, when you come down here and the bear market would continue, the size of these moves would usually increase, but because of the sideways movements, that doesn't necessarily mean that will be the case if, of course, there's downside movement. On any rallies, we'll be coming up towards this declining 18-period average. We'll also be coming up to a 38.2% Fibonacci retracement from this high and this low. Basically, what I'm saying is definitely be a little bit cautious on any rallies and show the normal signs needed for this thing to change over. Just the basics, make the higher lows, and then break resistance. Anything in that nature. So let's move this on to the weekly time frame, because not much is going on this week. And there's been a couple days where there hasn't been anything going on, as Christmas was this week. So therefore, on the weekly chart, we have this little tiny blimp along the way. And you can say, you know what, it's probably because it's the week that had Christmas on it. That's why it's not that big. And the last time we had Christmas on this chart was this period here. So no, that's not the reason why. It's just low volatile this weekend. Same old type of stuff. You got this low, you got this high. Which is it going to break out first? And in fact, it's been this long sideways consolidation. By making this nice low from this point in here and then retesting this level would give us a very bullish look towards the chart. Of course, there's no guarantees or even probability odds that I'd be aware of that's going to take place. And at the same point, continued downside would put this at the lower end of the range and thus give bearish signals. So we're in the middle part of this range, very much indecisive at this time. And I'd like to thank you for tuning into today's video and have yourself a great week and weekend. Bye-bye.